America, good afternoon from Germany. It's already Wednesday. Unfortunately, I wasn't able to live stream yesterday and the day before yesterday. There are no major news today, but I wanted to host another live stream because it is a week without major news, despite the Jerome Powell speech yesterday or the panel discussion. So let's recap what happened this week and what is important for this week or maybe for next week. And let's hop right into before the market opens. So let's begin with the yield curves first. So let's talk again about yield curves with interest rates, because we had strong labor market data last Friday. So the market is expecting now higher interest rate levels. We can see in FedWatch tool here, the next Fed meeting is in 42 days. And we now see already a 93% expectancy for higher interest rate levels of 25 more basis points, and even a 6% expectancy for 50 basis points. This is crazy because we had only an expectancy for 25 basis points or zero move the previous week, because Jim Powell was speaking really dovish last week. But it changed with the labor market data from non-farm payrolls on Friday, and with his speech yesterday we have said there is no room for lower interest rates, but we will have to rise the interest rate levels again. So let's see now the different interest rates for different expiries, for different terms here. And we are talking about an inverted yield curve here, when the yields here for the maturities in, for example, 3 months or 1 year are higher than the yields for 10 years or 30 years. So this is an inverted yield curve because you will get higher interest rates for a lower amount of time. And yeah, this is normally not good for the market, because it has never been a good sign in the past when the yields were higher for short terms, or higher for shorter terms than for longer terms. So normally we compare the 3 months to 10 years or 2 years to 10 years, and you see all these are inverted now, and we are in a backwardation. This is what the yield curve is now in. It's a backwardation, and you see it was even getting stronger now. The orange one is 6 months ago, so you see it was already inverted there. Then the green one is 1 month ago, and the blue one is the current line. So it is a strong inverted yield curve now. And this is what we also can see here in this chart, because here we see the percent of US yield curves inverted. So all the comparisons, 2 months to 10 years, 2 years to 10 years, and so on, how many of these comparisons are inverted now. And you see that we have reached a really high level, more than 70%. And the last times this has happened, we always had a recession. And this happened after 2019. So in 2020 we had the COVID crisis. This happened in 2007 and 2008 we had the financial crisis. This happened in 2000 and 2001. And then we had the economic bubble again in the tech sector. So every time we had a high number of inverted yield curves, we had a recession and we had a downfall at the stock market, and therefore we have to watch. It's not an indicator which shows us what happens tomorrow, but probably within the next 6 or 9 months. So therefore we have to watch closely what happens here with yield curves and with yield expectancies. Let's move on with our economic calendar. No important news for today. Of course, there's again one Fed member speaking, Williams, but only a Tuesday event. Tomorrow, only initial jobless claims like every week, and the whole week there is no major news. On Friday as well, but next week there will be important news with February 14th we will have core CPI on Tuesday, and this one will be important. You see, 3-star event. We always had huge moves in the past, and therefore we will have to watch out for Tuesday next week. Let's move on to the earnings. We had some earnings. The most important ones were last week on Thursday. but we will have, before market open was Uber. It was higher than expected. They had a positive earnings per share instead of negative ones, and revenue was also higher than expected. And after market close, we will have Disney. This is also one of the bigger ones, so this one will be important after the market close. And yeah, no big tech stocks. These were all last week, but some earnings still to go here. Now to the stock market, 10 minutes until we open. So let's see where we are right now. Let's begin with Nasdaq, maybe on a 15-minute time frame. This is Nasdaq future. You see pre-market is really calm today. During the Asian and European session, almost nothing happened. We had highs of 12,809 points and lows just recently at 12,699 points. So this is about a 100 points range, not big, but yesterday was really interesting because we had big moves during Jerome Powell speaking. So at first it went higher when his words were taken dovish, and then we rallied about 300 points to the upside, as you can see here, with high points of 12,778. Then we went down again. Look at this, 2.5% down from high to low, just to retest the lows of the previous day. So the previous day we had 12,456 points, and yesterday the low was 12,459 points. So only 3 points different. So we retested the lows. We were still trading above the moving averages, above 9 EMA, above 20 EMA on a day chart here. And we managed to close above parabolic SAR. So it's still in a strong uptrend. You can see here with parabolic SAR and with ADX. So back to a 15-minute time frame. What happened after the downfall? When we retested the previous lows, huge rally to the upside. Look at this. The high point was 12,818. Crazy. And right before the closing, we went down again to 12,720. A huge moves. Why did this happen? Of course, because Jerome Powell was speaking, but there was no major news. He was not telling something really new, despite the more rate hikes. But you see, it wasn't really taken for serious because the market rallied. And what I think is the option market is the explanation for it, because we have a lot of volume in the 0 DTE expirations. So all the options expiring the same day caused a huge volatility here. We have seen this already last week. We had the highest ever traded options volume, especially in 0 DTE options on Spider. And this happened again yesterday. A lot of 0 DTEs were open and traded during Jerome Powell speaking. And what does this cause? When the market is going higher, what happens with all the calls? The deltas of these calls get higher. And they are market makers. So the most people trading with 0 DTEs are trading against market makers. So when they buy a call, a market maker is selling this call. And the market maker is hedging the position. What means that he is buying stocks, future or stock, to hedge the position in a short call. Because a retail trader was buying a call and the market maker was selling the call. What now happens when the prices rise is the market maker has to hedge again his position. So the more the stock market rises, the more the market maker has to hedge. So it is like a self-fulfilling prophecy that we see, like this spiral effect. The more we go up, the more the market maker has to buy stocks or futures, and therefore causes demand, and therefore brings the prices higher. And at a certain point, everything breaks, like a bubble is bursting, and then the same thing happens to the downside. So now the deltas of these calls are getting smaller again, because we are getting out of the money again and far away from the strike levels, and then the market maker has to sell stocks or sell futures to hedge again and to lower his risk. And then at a certain point, the bubble bursts again and we go backwards. And this is what happened 3 times yesterday. High point, low point, and high point right before the closing, the psychological 12,800 level. You can imagine how many options were expiring at this strike price yesterday. And what happened here with a gamma squeeze, like here at the end, the last 10 or 15 minutes of trading before the closing of the market. all these options expiring in less than 10 or 15 minutes, causing a huge squeeze here for the market makers, having to buy in all these shares and then selling really fast before the closing to hedge their open 0DTE positions. And this is just crazy what is happening here, because now you are able to trade so many 0DTEs, and a lot of options are traded as 0DTEs, and this causes more volatility, especially on days like yesterday with Jerome Powell speaking. And I think it is not the end yet. We will see this more often. More volatility is coming this year, as long as retail traders are able to trade these instruments in such a high volume. I wouldn't say that only retail traders are making these moves here, of course not, but the effect is of course more seen when there's more volume in these 0DTE calls and puts. And this is what happens by hedging effects from the market makers. Just wanted to let you know this. So what are the important levels for today? Of course, the high point of yesterday and the high point from pre-market. So you see there's already a level here. This was a previous resistance level. So we almost hit it yesterday with 12,818. Let's just bring this level a little bit down to this area and then draw another level with a high point from pre-market. So there should be a resistance area within this area. And I want to short, as soon as we go above 12,800, I will look for an area to short here within this range, and I want to take on new short trades. So I traded yesterday to the short side and was stopped out when the market moved back. It's still looking bullish, as you can see on a day chart. It's still looking pretty bullish, but I want to take on more shorts here because I think this was a huge rally to the upside and the market is not really moving in the right direction. We see fundamentally with all the economic news, the market is too strong. We will see more interest rate hikes, and this will cause an even more and deeper recession that the market is expecting right now and that Jerome Powell is talking about currently. So let's see what happens here if we go to lower levels. So the next high point, of course, would be the closing here of last Friday. And if we go higher than this, then the high point of last Thursday. What else do we have to the downside? Of course, the closing of yesterday, the low point of yesterday and before yesterday. This is an important one. And if we go lower, then the next level would be this previous high point or maybe closing point here around 12,250 points. So there is a lot of room, as you can see, in between these two levels. So if we break yesterday's lows, there will be more sell-off. I don't expect this for today, but it can happen. We have just to prepare for it, because it can happen every day that we see something like this. A break through the 9 EMA, retest of the 20 EMA level, and then a pushback. So this can happen every day with these high volumes of 0DTE. So let's go in on a 5-minute time frame. Market is opening in about 1 minute, and then we will see what happens here when the volume is coming in for market open. So we are currently retesting the lows from pre-market. 12,699 was the low point. You can also draw some Fibonacci levels if you want to have more levels. I will normally use on a 4-hour time frame here if you want to have it. It's still loading here. If you want to have it on a lower time frame, you can just use this big push here from the high point to the low point, and you can use Fibonacci levels here. So if you want to see the resistance levels to the upside, you can use Fibonacci here, and you see right above this resistance area we do have an important Fibonacci line. The next one is the low point of today. There is the VWAP sitting right now, volume weighted average price. This is a 50% Fibonacci level. So this can be an important level for long traders, and right above here we will have an important level for shorties. Let's go to a 1-minute time frame. I will always wait for 15-20 minutes until the market is finding its direction. Normally the first direction is always the wrong one. So I want to see the market to go higher, retest 12,800 to take on some more shorts, and then shorting in the market and see a movement to the downside like yesterday. This would be ideal, but maybe I won't get another chance to enter at 12,800. Let's see what will happen here. If you have some questions, just write them down in the live chat and I can answer your questions. Market is rising, perfect, that is what I want to see here. But still some room to go. We can move on with Euro USD first and see this on let's go on a 15-minute time frame. So you see the movement yesterday. We could already see what will happen here, because here you see the market was rising, was going down, was rising and going down again. So we had huge moves here, and normally I use Euro USD as the currency pair with like an outlook for the stock market. So you see when euro is rising and US dollar is weakening, so when we see a shoot up like this, then normally this causes the stock market to rally. And when we see the opposite, US dollar gaining traction and euro weakening, then the stock market should go down. So what we see now here is that we are trading like the closing yesterday, but going lower now. And this should affect the stock market as well. So when the US dollar is getting stronger, more money is pulled out of the market, especially the stock markets and the markets with higher risk, and is transferred back into US dollar as safe haven, into the cash money. This is what we can see here. If we look at it on a day chart, it's interesting to see that the previous days we were going backwards. Now we are just holding the level. Yesterday we had an interesting doji. We will now see if the market is reacting positive on this doji. But last week we were talking about this area. So I said when we pull back, the potential target is 108. And you see the low point was 108. So we hit my target we talked about in the previous live stream. You can still rewatch it. And then we went even lower here and retested previous lows at this Fibonacci area. Now let's see if we can pull further down, or if we will first see a pullback to the upside. But always remember, Euro USD is an early indicator for the direction of the stock market. Let's see Tesla stock. Tesla stock is still strong, holding its levels, because Elon Musk is happy that he has won the lawsuit. And we are still holding below the $200 area. High point was 199.00. So just $1 below the $200 area, and we are still holding this area. But normally this is a sign of a weakness for the bulls, because we are not trying to push through here, just trading sideways. And I'm curious how soon we will see a drop. Minimum here, a drop to the 175, 180 area. This is minimum target. But I want to see a further pullback here to the 160 area or even 150 area. This will still be healthy for Tesla. I'm currently in a bear call spread position. So I opened a call position in the options. So I shorted a 250 call and bought a 270 call. So this is a 20 strike bear call spread. And I can make some money if the market or if Tesla is pulling back. Let's move on with crude oil. Crude oil is also interesting because we went down heavy from the rejection here in this resistance area. But then, as you can see, the day before yesterday, we made new lows, retested the previous ones, just went below the previous lows just to go up again. And yesterday we had a rise of more than 4% to the upside, and today again more than 1.4% to the upside. So it will be interesting if this time we will be able to go through this area here, or if we will again fail to retest at this area. But we still have some room to the upside here for now. Overall, it's in a sideways trading phase, not pulling down anymore, but just holding the levels and going in this broader range between $72 and $82 sideways. Natural gas is also interesting. Let's move on with natural gas. Natural gas tried to pull higher the previous 2 days. We had lows here on last Friday of $2.34 for March future expiry. Then we went higher and pushed to highs today of $2.65, but probably will get a second chance here in the lows of the $2.40 area to take on a long trade. And this is what I'm waiting for. I'm waiting for a retest of the $2.40 level and then see that the level is holding. And as soon as I see this, I want to take on some long trades for a higher move here above 260 back to the 280 or maybe $3 area. Yeah, it was a long move to the downside, but probably we now see a cool down here, sideways trading phase, and as soon as this sideways trading phase ends and we have made a bottom here, then we will see a reversal to the upside. But it takes its time and you have to be patient to wait for it. Back to Nasdaq, still retesting the lows here, sideways trading, therefore wait for direction, not step in a trade too early. Let's move on to what is interesting, orange juice. Orange juice was trading higher all the previous week, as you can see, and we even made here higher highs. It was looking interesting for an early short, but it is in a liquid market, and you see high volume here, so a lot of short squeezes to the upside. And it's not over yet, so it can still pull higher. So I will wait, but I'm pretty sure that this one will reverse heavy. As soon as we see a high point here and a stronger pullback for one day, then probably we will drop hard here. And therefore I will be prepared to enter a short trade in orange juice. And another interesting commodity is, where is my sugar? Here. Sugar. So we made higher highs. We were sideways trading for about 4 days. Then we pulled back heavy, as you can see here, back to the next Fibonacci level. So if you just used these points here as Fibonacci, then we are trading higher now, yesterday and today. But this one should now act as a resistance. Let's see if it holds. And then you can take on new shorts at this point here to the downside. It's still pulling higher now. But yeah, it failed here for the final breakout. We just break through for 1 day. We're sideways trading here, and now we pushed lower, pretty with a lot of volume, as you can see here. So 50,000 contracts traded on a day, with a lot of pushing to the downside. So let's see if we can pull down more here. I'm not in a position right now, still waiting for an entry here at about this previous high point at this area to take on some early shorts. Let's look at Apple. Apple on the day chart. Apple, we had, let's see, only trading hours and not pre-market. So we had some pushing here for the highs last week up to $157, and now we are sideways trading here. We still have an open gap, as you can see here, which is not closed yet. So maybe we'll see a drop here for a gap close back to the $145 area. So there's still this open gap here since last week, Thursday and Friday. And therefore I'm waiting for this gap to close first before I would take on new long trades. It's still looking bullish, of course, especially on a week chart, as you see, but the previous highs are still in place. As you can see here, previous high was $157.50 and the current high was $157.38. So this one is still in place, and normally we are not able to go higher on a first attempt. Therefore I would wait for the pullback here to the $155 area. Let's talk about VIX. VIX is pulling back below 20 level again. Yesterday, for when Powell was speaking, we went at highs to about 20, but it's still at a low level. I placed some long bets here on VIX to be able to catch some rising volatility when markets are pulling back. Like always, it's not an investment advice. Always do your own due diligence. I'm just talking about what I'm seeing in the market and what I'm currently trading. Let's talk about SPDR. So S&P 500. Let's see it on time frame on a daily time frame here. So we pushed above previous highs, as you can see here. Then we went back, retested previous highs, and yesterday we had a huge green candle and tried to push higher. But it's still a lower high right now. It's in an uptrend, of course, as you can clearly see here. This is an uptrend, and even a stronger uptrend in the previous days here. So it is an uptrend, but we have to push above previous high to stay in this uptrend. As soon as we make lower lows, so below the low of yesterday, below $407.57, then we will probably see a break of pattern here, and we will see a correction. So minimum here to the $402.50, or lower if we see a retest. So this will be interesting within the next days. The high point of yesterday, where if we push above, then a retest of the previous high. If we push below yesterday, then probably a break of pattern of the stronger uptrend and a retest of the $402.50 area. So if you are looking at gold, gold is also interesting because it pushed back heavy last week when they were talking about higher interest rate levels. And you see how hard gold was pushing back here. This was a move of 4.8% in only 2 days. Really strong. We are now trying to recover a little bit, and we have still room to the upside here to the 1900 level or maybe 1915, but then we should see more resistance here, and yeah, maybe pushing further down. Depends on what the expectancies for the interest rate levels are. So let's see the expectancies again, probabilities here for the next Federal Reserve meetings, and we now see that the high point is not at 5% anymore. It went up to 5.25% now, and you see there are pretty high expectancies now. 68% for May, 47% for June, 46% for July, and so on. And you see also that the drop of interest rate at the end of the year is not 2 drops anymore in November and December. There's only 1 step back here with 35% probability in December, back to 5% level. So this is still higher than we had the expectancies last week. So big shift here for higher interest rate levels. And this, of course, is pushing gold prices down because you have opportunity cost when you hold gold. You will not earn dividend payments, you will not earn interest. So if your money is stuck in gold, then you won't get interest. And this is just the opportunity cost for gold. And the more the dollar is getting stronger, the more gold should also push down, because in foreign currencies, especially in India with the Indian rupee, you will have to pay more in their currency to afford gold. And therefore they are willing to pay less for gold in amounts of dollar. And the stronger the US dollar gets, the more it pushes on the commodity prices as well as the higher interest rate levels here. So back to Nasdaq. This is the rally I want to see. Push back up. And the market is now open for 15 minutes. So we still have about 15 minutes. Then often we see around 10 a.m. Eastern time, when the market is open for half an hour, then we see a shift or a turn. So I want to see in the next 10 or 15 minutes a pushback to the 12,800 points level. And there I want to take on some new short trades. Pre-market high was, let's go back to a 5-minute time frame. Pre-market high was here right before the European session, 1289 points. So maybe we'll see a retest of the 12,800 and just push above through some stop losses, which are normally placed right at the 12,800 or above. Just push higher for 5 or 10 points into the resistance area, and there I want to take on some new shorts. But we need more bulls, more dip buyers to enter here to push higher. But it's looking good so far. As you can see on a 5-minute time frame, we had a big candle at market open for indecision here. Doji candle. And normally when you see a downtrend here, so push down, and then a huge doji like here, this indicates a change of direction. And in this case, a change of direction to the upside. And this is exactly what I wanted to see, just to get into my short at a higher price area. So now to your questions from the chat. What delta you use for the Tesla spread? So when I sell puts, either on the put side or the call side, I use delta 16. So I sold delta 16 puts. These had a $250 strike. I sold the $250 strike and I bought the $270 strike just to place a bet with a defined risk. So because I placed this one on a smaller account, I didn't want to have a lot of margin for this trade, and therefore it is a bear call spread, which uses less margin of my account. So I'm still able to have enough margin for my short trades here, my directional short trades in MNQ and NQ futures. Can I have your opinion on block ETF? Yes, of course. Let's talk about block. Which chart do we use? I will just open a new one. Block. So this is block. Let's see it on a daily time frame. So looking good here. It was rising since last December, and you see this, other than Nasdaq, it already made higher highs here on December 6th, and last week we had on Thursday the high points here above the previous highs. So this is a good sign that we had a huge breakout here. We already closed this gap here, still making higher lows, so it's looking good so far. Let's see this on a week chart. So this area here is a pretty good resistance area. You can see last week we didn't manage to close above. So this one is still in place. It was a previous support to the downside. Then it was a resistance. Then we had the break above, huge rally, and then it was a support again. It was a resistance again. So this one is important here, this area at about, what is this area? $20, about $20 or $20.10. This one will be important. We have to close above on a week chart to see more bulls to step in and to see higher rising here of block. But for now, it's still acting as a resistance level on a weekly time frame, and we could still see a pushback. If you want to take on a long trade at lower levels, then let's use our Fibonacci here from the previous high point of last week to the low point in December. And then you see the next levels on the downside would be here the $19.40, the $18.50, and the $17.77 would be a 50% Fibonacci correction. So there's still some room to the downside if you want to place your bet for a long trade on a lower at a lower price level. There's still some room, but I would minimum wait for breakout above $20.10 for closing of the week, and then I could go to the long side, but I would wait for this to happen, for not being caught in a sideways trading phase here. Maybe you see here the last time we had 2, 4, 6, 7 weeks of sideways trading here before we had to break up to the lower side. And therefore I would wait this time not to be caught in an early trade, wait for the breakout and maybe wait for lower levels to come to step in a little bit cheaper if you want to go in long. Like always, no investment advice from my side. Tesla broke 200. Let's see. Wow, yes, we broke above 200. $202.45, and you see how fast it is pushing now to higher levels, because of course a lot of stop losses were placed here. It's higher, about 2% higher now. So let's see if it closes the day above 200 or the week above 200. This will of course cause more buyers to step in, but this can be a false breakout just to catch some stop losses and then go lower again. So I would still wait. I'm in my bear call spread position, so I have some time, because time is in my favor as long as the prices are not pushing higher 10 or 15%, because then I will probably have to close for a loss. Nasdaq pushing to the downside again. So it was too early to party to go short here. So we failed to go higher here. and retesting the lows again at the 12,700 level. That's how fast the market can move in these days. I still have some shorts running, but it's only a small position. So I want to get in more shorts, either on a higher level like 12,800 points, or if this doesn't happen, then I will probably short more below the lows of yesterday and the day before yesterday, because then it's looking more bearish than bullish. But as always, for swing trading, you need time, you need patience. This is really important for a trader. Never get into FOMO, never buy in too late, and also not too early. Always know that you will get a second chance. If you miss the first one, this is one of my favorite sayings of Mr. Costellani. He said, never run after a tram or a missed chance, because you will always get a second one at the stock exchanges. Therefore, just be patient and wait. And this is what you have to think of every day, being patient and wait for your second chance to come. And if you missed your first chance, then there will be another one, maybe in another instrument, but you will always get another chance to enter a trade. Pushing lower here, making new lows. Interesting to see that Tesla is strong while market is pulling back. But this could indicate that this was just a false breakout, trying to push some shorties out here. And you see how the implied volatility is rising. This is just not the normal move, because normally when the stock is rising, implied volatility is going down. But now here we have a lot of fears from technical side, because all the ones who shorted Tesla will now have to close out the shorts or just to cover with long calls, and therefore they ask for calls. They want to buy calls, and therefore the prices of calls are rising, and we see a higher implied volatility out of these higher call prices. This is what is happening right now, but maybe it was a false breakout. We will have to wait. But therefore I like to be in a option position, not in a directional trade. Here I still have on one of my accounts a directional trade on Tesla. I entered a little bit early at $194.40. So this one is a little bit in the red, but it's only a small position for my portfolio size. Therefore, I'm still waiting for the week to close. If we close above 200, I will cut the losses. But I still think that Tesla has to go lower, almost a little bit, to get in new buyers. So let's see 2 more minutes, and then I can close out this live stream and we'll let you trade on your own. I don't know when I will host the next live stream, but there will probably be one more this week. Not a lot of economic news this week, but next week will be important. Tuesday, and of course we will live stream this one together. New lows. Still some room to the downside to the next supporting area. So you see there is some room here. 12,635 points is the Fibonacci level. 30 more points to go. We had a low point here right before the closing yesterday, 12,660. This is the current price level. Could be a smaller support. But it's not over yet. We are still in the first half trading hour. Therefore we can still see a fast reversal like we see now. Parabolic SAR is now moving to the upside, indicating an early short trend. And you see here we had already the crossing here. DI minus to the upside, DI plus to the downside. A strong trend on a 5-minute time frame. Stronger downtrend. Let's see this on a 15-minute time frame. So here We have no strong trend on a 15-minute time frame, because here DI minus is above DI plus, but you see the red line is at the 15 area, and we need to have it above the 20 to see a stronger trend, because pre-market we were just trading sideways, and these first 20 minutes just do not indicate a strong downtrend. Therefore we need more time to pass to see a stronger trend on higher time frames like 15 minutes or even 1 hour. Let's see 1 hour time frame. The same here. Not a strong trend, but about to cross here, indicating an early short. We are still above parabolic SAR, as you can see, so we need the closing in about 4 minutes below this parabolic SAR dot to see a change of direction to indicate a short trend. This is not happening right now on an hourly time frame, but there are still 4 minutes to go. Do you hold any long-term ETFs such as EOO? Yes, I do hold long-term, especially on MSCI World. So my favorite one is MSCI World ETF. But I'm not able to trade US ETFs, therefore this is a German one. And especially for my kids, I'm just investing into MSCI World ETFs because this is easy. You can just place it every month, the same amount of money. And it is almost tax-free for my kids because they are still young, do not earn money. And therefore it is always interesting to put some money on the name of your kids in Germany. But for my own, I'm investing in single stocks and trading on my trading account here with options and futures. So pulling back, 3 more minutes to close. Let's see it on my favorite time frame, 5 minute. Pushing back here. Maybe retest 12,700 level. Let's go back to Tesla. Tesla is holding above the 200 area, but trading sideways now. Let's see Microsoft, because Microsoft should also be interesting in terms of AI, because a lot of people are now talking about ChatGPT and other AI software. Google announced yesterday that they will bring out their AI software for Googling next week. So let's see how this will end with this AI fights from Microsoft and Google. But a lot of AI stocks like Google, Microsoft, and also Nvidia and others are rallying now. As you can see, a lot of gaps here, but upside gaps still open. So this will be interesting as soon as we see a pullback. But I'm bullish for Microsoft. It's an interesting stock, especially long term. And you see we are now above the previous high points from December 13th. So it's still bullish. We are making higher highs than last week. Pretty bullish for Microsoft, but a lot of open gaps here, and therefore there's a lot of room for pullbacks back to the $250 area if the market is turning to the downside again. Never get into FOMO, you will always get a second chance to enter your favorite stock. Back to Nasdaq. We closed the first half an hour right at the 12,700 points area. So it's not over yet. We are back at the support level or resistance level now. So let's see if the market wants to push to lower areas or if we will get a second chance to enter at the 12,800 area. A lot of more hours to trade today. I wish you happy trading, all the best, and hope that you will make some money. We will see us in one of the next 2 trading days. And if you haven't done so far, please consider subscribing to my channel and give me a thumbs up for this live stream. Thank you for watching. See you next time. Goodbye.